All right, we're going to try and make sense of one single, really chaotic day, December 18th, 2025. It was a day that sent completely contradictory signals all over the world, and believe me, we are going to connect the dots.
So on the surface, things looked pretty good, right? The tech-heavy NASDAQ, it surged 1.4%, and that snapped a 4-day losing streak. After days of everyone worrying about an AI bubble, you could almost hear investors breathing this collective sigh of relief. But at the very same time, a pretty chilling warning was coming out of Russia. President Putin announced a brand new nuclear-capable missile, and he was boasting that it's, and I quote, impossible to intercept. And while the traditional markets were popping champagne, the world of digital assets was in a total panic. Just look at the crypto fear and greed index. It's a scale from 0 to 100, and it absolutely plunged to just 17. I mean, that is a crystal clear signal of extreme fear among crypto investors. So what in the world is going on here? You've got a booming stock market, a brand new nuclear threat, and a completely terrified crypto market, all on the same day. How does that even make sense? Okay, let's dive in and figure this out. Well, the story really starts with the US economy, because on this particular day, it sent two very different messages to the rest of the world. And this is where the real contradiction kicks in. Okay, so on the one hand, you had fantastic news. The headline inflation rate fell to 2.7%. That suggested the Fed could finally start cutting interest rates, which is what everyone wanted to see. But then, on the other hand, the unemployment rate jumped to a 4-year high of 4.6%. That's a really clear sign the job market was starting to crack. And if we dig a little deeper, we can see even more signs of that underlying weakness. While the big national numbers were kind of mixed, the regional manufacturing data from the Philly Fed, it was just outright negative. A reading of minus 10.2? Whoa, that shows a really sharp contraction and points to some serious struggles in the industrial heartland. Okay, so let's shift gears and look at the markets. How in the world did they process all these conflicting signals? Because believe me, this is where the story gets really interesting. So in this battle between good news and bad news, stock market investors, they decided to focus squarely on the good stuff. The idea of the Fed cutting interest rates, making money cheaper to borrow and boosting profits, that was all they needed to hear. And boom, it triggered a really powerful relief rally. And wow, the AI hardware sector was just absolutely on fire. Check this out. Memory chip maker Micron Technology soared an incredible 12.5%. That's after their earnings report just blew past all the estimates, all fueled by that relentless demand for more and more AI hardware. But at the exact same time all this was happening, some investors were getting really nervous. You could see this flight to safety happening in real time. Gold, the classic safe haven asset, hit a brand new all-time high over $4,400 an ounce. So even with stocks rallying, it's clear a lot of people were hedging their bets in a very big way. And then you look over at the most speculative corner of the market, and it was a total bloodbath. Investors were basically running for the exits. Cryptocurrencies were selling off hard. And just look at this. The Fear and Greed Index showed that a staggering 83% of market sentiment was just pure anxiety. So you have to ask, right? Why all the fear? Why were people rushing into gold while tech stocks were booming? Well, to understand that, we've got to look at the third front that just exploded into the headlines on that day, a rapidly escalating geopolitical crisis. Yeah, tensions in the Caribbean had really reached a boiling point. The U.S. administration declared what it called a total and complete blockade of all Venezuelan oil tankers. I mean, this was a move designed to completely sever the nation's economic lifeline. And make no mistake, this wasn't just some regional issue. It escalated quickly. After the U.S. seized a tanker back on December 10th, and Venezuela called it illegal theft, this brand new blockade on the 18th drew a really sharp and immediate response from Moscow. They warned the U.S. against making a, quote, fatal mistake. And Russia didn't just stop at issuing a warning. Oh no, they made a serious countermove. Right as this crisis was unfolding, Russia's key ally, Belarus, announced that the newest Russian strategic weapon, the Oreshnik missile, had just arrived in the country and was officially entering combat duty. And you have to understand the sheer speed we're talking about here. With its hypersonic velocity, the Oreshnik missile can hit NATO headquarters in Brussels in just 17 minutes. Think about that. This isn't just some vague threat. It is a very specific, calculated escalation that dramatically, and I mean dramatically, lowers the time anyone has to react in a potential conflict. And that brings us right to the core of this whole thing. These three fronts we've been talking about, the economy, the markets, and geopolitics, they aren't separate stories at all. They are deeply, and I'd say dangerously, interconnected. I know, it might seem totally disconnected, right? How does a simple inflation report out of Washington, D.C. have anything to do with a missile system sitting in Belarus or the price of Bitcoin in Tokyo? Well, on a day like December 18th, you see how they all snap together to form one single interconnected story. So let's break down this global feedback loop. It's actually pretty straightforward when you lay it out. Step 1. The cooling inflation data, that creates hope. That hope flows right into interest rate-sensitive tech stocks. Step 2. The crisis in Venezuela, that creates fear, and that fear flows right into the traditional safe haven of gold. And then, step 3, you take that toxic mix of a weak economy and geopolitical risk, and that creates deep uncertainty, which just sucks all the capital right out of speculative assets like crypto. So all of this, everything that happened on this one day, it perfectly sets the stage for 2026. And it leaves investors and policymakers staring down two completely different paths forward. And this really is the central tension, the big question mark. On the one side, you have the bull case, the soft landing. That's where the Fed successfully cuts rates, the job market recovers, and the AI boom continues. On the other side, you have the bear case, the maritime contagion. This is where the Venezuelan conflict blows up, disrupts global shipping and energy, and sparks a conflict-driven global recession. In that, right there, is the pivotal question that this single chaotic day leaves us with. We're on a global stage defined by technological hope on one side and geopolitical fear on the other. Which one of those powerful forces is ultimately going to win?